Hey, good morning. This is Mayor Valensky with the Driving Markets. We've got a hell of a lot to talk about now. Wow, the overnight futures are all down. So overnight markets are all down. And the thing to look at this morning is the price of oil. Wow, the price of oil has jumped over 10%. It's now Brent crude is running it close to $129 a barrel, with light crude running at $125 a barrel. That is a massive increase. Now, taking into effect that this week you've got the CPI, the Consumer Price Index in the States, and everyone was hoping, falsely, but hoping that maybe inflation will come down when reported on Thursday in the States. In light of the oil price rises, in light of all the commodity price rises and general supply problems, you can expect inflation to be red hot when it comes in on Thursday. The consensus opinion is year on year it's 7.9% in the States, a rise from 7.4. I think it's going to come in at around about 8.2, 8.3. Please make a note that I'm saying to you now on Driving Markets that it looks like inflation is going to exceed 8% in the States. That is going to have a massive impact on the Fed. The Fed doesn't know what to do. The Fed's in a very difficult position now where it's got raging inflation, and yet that inflation is supply driven and obviously geopolitical driven. So what impact is interest rates going to have on controlling that inflation when you've got a supply driven issue and you've got a geopolitical issue, which is the war in the Ukraine? Interest rates are not going to impact inflation based on those two factors. They might impact slowly on the psychology, but however, inflation is on the up. Look at the trend, look at the graph, look at the supply chain, look at the cost of commodities, which are all-time high, and you're going to have inflation exceeding the 40-year high. It's the highest it's been in the States in the last 40 years. It's something to look at, and the central banks are confused and don't know what to do. Not only do they not know what to do, even when they do know what to do, they're well behind the curve. In other words, they're too slow in taking action on inflation. So that is just going to be raging. And the price of oil, wow, it's just gone through the roof. Also, the US 10-year Treasury, look where the yield is. The yield is what you get on the return. It's less than 1.72%. In other words, investors are pouring into bonds in order to secure their money because the US Treasuries are deemed as a safe haven. Let's look at Russia. Moody's has just downgraded Russia to junk status. That means that it is very highly likely that they could default, and they probably will default on their sovereign debt. That means that, what does that mean, default? What does that mean in simple terms? It means that they won't pay the interest due to those bondholders that are holding Russian investments. So Russia has been downgraded now to junk status. In other words, it is worthless. You've got everyone pulling out of Russia. On Friday, JP Morgan, American Express fell significantly. One, on the back of the yield curve on the US 10-year Treasury, and two, on the fact that they're heavily invested in Russia over the last 20 years. And their investments are going to be downgraded significantly. So JP Morgan, American Express, Citibank are suffering significantly, as well as other European banks, as well as UK banks. They haven't yet fully assessed the damage of where they're at as regards Russia. You've got commodity prices at all-time highs. What are commodity prices? We're talking about wheat, grain, corn. You've got a supply issue because Russia and Ukraine are the third biggest oil producers in the world. So you're going to have oil price, you're going to have oil crisis, you're going to have commodity prices crisis. All this is going to feed into inflation. I've been saying it for months. I've been saying it since September. It looks like inflation's going to get higher. Some people ignored me, some people paid attention, some people belittled what I said, which is fair enough. Everyone's got an opinion. I am telling you, and I'm saying now my opinion. At the end of this year, the Nasdaq is going to be at 7,000. It's been held up by Microsoft and Apple, which constitute 25% of the Nasdaq. You take those two constituents out, or if there is a downturn in Apple or Microsoft, you will see the Nasdaq being hammered. It's been hammered overnight. So the markets are significantly down. You've got to look at the trend, and as long as this war goes on, and it's going to continue going on, not for a few days, probably for a few months, you're going to have a big impact on commodity prices and oil prices. Look at gold. Gold is nearly $2,000 an ounce. You've got everything happening in the soft grains. You've got the commodities that are going up. You've got financial markets going down. You've got a threat of interest rates going up. You've got major economic factors and geopolitical factors playing out here. So those people who are not short of the market or haven't taken out put options, you should be looking, even at these levels, you should be looking at protecting your portfolios. If you haven't done it, look at it, speak to your advisors. If you need any help, you can contact me direct on LinkedIn or WhatsApp or on Instagram. You can subscribe to my YouTube. You can like all of the videos, and hopefully you get some good guidance. This is May Valensky with Driving Markets. Have a good day.